Okay, picking up right where I left off basically, but just posting it a day later. This is the review of the 250 point trade that I posted on Twitter. I'll also put the link to this tweet down below. Here is the picture of the executions. I need to do pictures of executions for the other ones. Couldn't copy. The image pasted is way too large. Okay. Is this not large? All right. This is like literally a 1/4 inch smaller. Anyways, yeah, sold. And I want to get these numbers for myself too, so I'm giving accurate representation. Sold at 970 and took profits at 884 and 757 and 717. Yeah, I think this is like the 5-minute chart because the trade was so big that I couldn't show it on the lower time frame. Yeah, that's a lot of points. Okay, so how did that happen? Identifying the higher time frame trend. Once again, identifying the higher time frame trend. So let's get down to the 2 hour. That's step one. So this trade was from around over here. Yeah, this trade was from over here. Identifying the higher time frame trend would mean that I am looking and seeing that the one sec. This is bothering me. Okay, higher time frame trend is a 2 hour being bearish. Step one, 2 hours bearish. It hasn't yet shown us that it's ready to flip up yet. So we're going to just follow the 2 hour trend, especially because we're taking 15-minute size trades. Identify the trend on your middle time frame. 12-minute chart is what I used on this one. So I'm going to look at the 12-minute chart on this right here. 12-minute chart is bearish. Now, why did I use the 12-minute chart? Because, like I said, it's not about the patterns being perfect mechanical. If it was, I promise you, if it was just this mechanical pattern, then you would be like, it would be so easy to be a freaking billionaire because you could just find something and that would work all the time and you could automate it and I wouldn't be talking to you guys. I would be a billionaire. I would literally be a billionaire. I'm not a billionaire. I'm not poor. I'm not a billionaire because I don't have an automated strategy that just prints money like around the clock guaranteed with, minimal losses. So that being said, the 15-minute did close below this low right here. So why do I want to disregard the 15-minute? Because if the 15-minute closed below that, then that would make this a swing down. If that makes this a swing down, then that makes this up here a flip up, which means that we are actually in bullish market structure on the 15. So on the 12, we're still in bearish market structure. On the 15, we had flipped to bullish market structure. It's weird. I was painting a picture for my narrative. I'm also looking at the 2 hour thinking, okay, let's pay attention to the way that this is moving. We're moving up in this channel, and when we poke below, we rip up. When we poke above, we might rip down. It's literally just that simple. I'm looking at how the market is moving. I'm not using an EMA or something like that. I'm just looking at it and seeing from my experience, right? So go back to the 12-minute. I identified that as still bearish. So we're going to go ahead. Excuse me, I got the hiccups now. Keep this drawn on here, right? Magma, why didn't you put a swing here? Because we didn't close above this candle on the 12-minute. Because we didn't close above the 12-minute on the candle, 12-minute candle. It's not a swing. It's not a low, so it's not a high, so it's not a swing, so it's not a structural flip up. It is just a bearish swing. We come back up into it, and we start to make bearish market structure to the downside. So this is kind of the reverse of a lot of the trades that I've been talking about, because a lot of the trades that I've been talking about say, okay, we flip down on the 1 minute, and then we go and we take that flip out. But look, structural integrity. That is what we call structural integrity, right? We're holding this and not taking it out. So that's another thing I'm paying attention to right there for the short. Step 3, watch your lower time frame and wait for it to make a draw and change to bearish order flow. In this case, the draw is 50% of the 12-minute bear flip zone. Okay, so simple enough. Let's go down to the 1 minute. I already have the 50% of that bear zone, that flip down, drawn out. And as you can see, price flips bearish on the 1 minute right here. So explanation is basically done at this point if the timing wasn't weird, because we ended up going all day, getting all the way back up here, and then flipping down again. Flipping down again before you go and take that 1 minute flip up, flipping down again before you go and take this, is good. It's kind of like the idea of like a double valid pullback or something of that nature, right? So let's look how I was able to recover and get back in the next day. So first things first, market opens with a gap. I'm looking at that gap thinking you're probably going to get filled. So I'm waiting for it to get filled. Step 1, it does get tapped here. So I guess you could consider that a fill because it like touches basically exactly to the tick. But I mean, we didn't have a flip down here on the 1 minute. So as long as we don't have a flip down on the 1 minute, we're still trending up on the 1 minute until, we're informed otherwise. Which we become informed otherwise once we close below this. So this is a lot of zones stacked on top of each other, but we have bearish market structure on the 12. Very important that we're in current bearish market structure. You want to pay attention to what the market is doing right now. That's step 1. Step 2, identifying a flip down, especially after making a draw on something inside of the zone or hitting that 50% or higher. Step 3 is having to find this re-entry model with a flip down without breaking the structural integrity on the 1 minute. That shows that the order flow on the 1 minute is remaining bearish, even though it looks like we're trending up. It is not able to break above that high that flipped us down initially. So once we flip down, where did I get in? 969. Yeah, right here. So I just waited for a retrace. That was all. So let's go to the 15. There's our 1 minute flip back down. We retrace up into it. 969. Boom. Entered on the retrace, said, you know what? If I die, I die. I'm going to bed. And took it with only 5. So if I had lost, $500 loss, that's okay with me. This was on a 150K account. And targeted, how did I get 250? I think this was just runners. Yeah. So the target, I gave the signal. Let me look at this signal. Right here. Here it is. So 1026. Oh, it looks like I just covered that actual flip up there instead. So $550 loss. Targeting 853 and 790. So now I know that 853 and 790. 853 is already a banger to begin with. Jeez, dude. People are like literally in all these groups trying to figure out. I don't even get it, man. Hey, there's 853 for 115 points, and then 790 was target 2 that I signaled, and there's almost 180 points. And then as far as runners go, I just got stopped out on the runners, I think. Trying to figure out why I got stopped out where I did. Let's go to the 1 minute. because the runners are very important. So knowing like why you got out of your runner is really important in my opinion. I think it was probably just stopped out above this, but let's see. Measure it out to 250 and find out exactly where that aligned. Okay. Yeah. We had made so many draws to the left. I got to the point where even though our swing is here and then our swing is here, I put my stop loss, I want to say like pretty much above this SNDR potentially. Right here. I don't know. But the execution shows $717.75. $717.75. So yeah, basically right where I'm at. Right there. So I got stopped out when I put my stop somewhere around 17.75 for some reason. Price came up and took it. I was fine with it. I'm done. It's good. And that's the trade recap for that one. So again, just to TLDR. What was that? We made a draw on the 2 hour zone, still into our bearish structure. We make a flip down on the 12. We remain bearish on the 12 on our middle time frame. We flip bearish on the 1. We hold the structural integrity on the 1 and flip bearish yet again. I take my opportunity to take my short with a risk that I feel like is fair. I get a 5R. 5R is great. Not all trades are going to be 5R, but sometimes they are if you let your runners run, and that's awesome. So yeah, that's pretty much it. Again, I'll put the link down below for the Discord channel. Make sure that if you want to join premium, you do not buy premium before you join the free section of the server, because otherwise it'll screw up the payroll automated system process, and then it's a real problem for everybody. And yeah, again, as always, if you have questions and you're not in premium, if they can be answered without me needing to show any diagrams, you can go ahead and ask them in the comment section or on Twitter. If you have more detailed questions and you want to get some education on this stuff, I'm happy to answer questions for premium students in the premium chat section. I was drawing diagrams for them today, and they were, taking notes and putting them in notepads on their iPhones and stuff like that. So I'm always gonna interact with you guys. It really only takes like a few minutes out of my day and paying customers, so why the hell not? But again, this isn't a mentorship, hence why I'm doing these videos, because this is kind of that educational part. The signals group is for you to be alerted why or when I'm taking trades in real time, where I'm targeting, where my stop loss is, and a brief explanation for the entry model. That's pretty much it. All right, peace out.